Building a dividend income focused portfolio that's going to pay you an extra $1,000 per month is not as hard or as expensive as you might think. And this is due to different investment options now being well available throughout the markets. Now in this video specifically, we're going to go over 3 different relatively safe, ultra high yielding ETFs that can pay you as a dividend income focused investor $1,000 if not more with a relatively small amount of money invested into them. Now, all 3 of these ultra high yielding dividend focused ETFs not only have a positive total return, but also most importantly for the context of this video, they are ultra high yielding. So by investing into these, you're going to receive a lot more cash flow with a lot less invested. So if you're interested in seeing 3 different ultra high yielders that are relatively safe and that can pay you $1,000 pretty simply, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, first off, out of the 3 ultra high yielders that can get an investor to a $1,000 dividend income amount for a lot less invested, relatively speaking, I'm talking about one of my newer favorites, QQQI, or the NEOS Nasdaq 100 High Income ETF. Now, over the last year, I've been investing a ton into these different NEOS ETFs. I'm talking about SPYI as well as this one, QQQI. And this is because for the most part, their strategies are relatively bulletproof, and at least historically, these ETFs have paid a massive amount of distributions. Now looking at this ETF's performance on the max time frame, this ETF is down 2.81%, and this is since around the beginning of this year. Now I promise that every single one of these ETFs are going to have a positive total return, which I'm going to show you here in a second, so it's not like you're going to be investing into any of these and get paid a massive amount of cash flow, but lose your shirt in doing so. Now the expense ratio when it comes to this one is 0.68%, which is more or less fair with the amount of management this ETF has. Now I promise you guys, you could potentially get to $1,000 of monthly income from all 3 of these different investments, and I was not kidding. This ETF, first of all, QQQI, offers around 62 cents per share per month, which is massive. This equates to anywhere from around 14 to 16%, depending on how much it keeps paying. Now, if this ETF has been paying around 62 cents per share per month, and we're trying to find a path to get to $1,000 relatively cheap, this means that in theory, an investor would have to only purchase around 1,600 shares of QQQI in order to hit that $1,000 per month goal. Now, just to prove that QQQI has offered a positive total return over the last half year or so since this ETF has been trading, this ETF with $10,000 invested and dividends reinvested along the way has offered investors around a 5.14% total return or an annualized gain of around 10%. Now, if the dividends were not reinvested, it's still around a 9.65% positive annualized gain. So like I said, every single one of these ETFs, although they are ultra high yielding, they have a green positive total return. Now, the next ultra high yielder that could also get an investor to that $1,000 goal potentially very, very quickly. This is one of my newer favorites also. I'm talking about SVOL or SVOL, the Simplified Volatility Premium ETF. Now, this ETF, although it is down in the 1-year time frame and it is right in the max time frame, this ETF has around a 16-17% yield. So besides the price decay or a little bit of price decay, it has definitely been made up for. Now, SVOL does have an expense ratio of 1.16%, very, very expensive, but again, because you're earning around a 16 or 17% yield, investors are more or less okay with this. Now, SVOL historically has paid investors every single month around 30 cents or more. As of recently, it's been 30 cents, so we can go off that. Now, this means that if an investor wanted to reach that $1,000 goal of cash flow from these ultra high yielders with SVOL, an investor would only need to purchase around 3,333 shares of SVOL to reach that $1,000 cash flow goal. And even though SVOL does offer a massive yield, and on top of that does have a tiny bit of price decay, a $10,000 investment with dividends reinvested would have returned investors around 37% total return or around a 10% average annual total return, which either way how you want to look at it is not bad whatsoever, especially for some investors that are fighting for some massive yield. Now, even with dividends not reinvested, we're still at around 29% and an 8%. So if you want some exposure to some ultra high yield, this once again could be a good option. Now, last but not least, we're going a little bit crazier with this one. We're talking about YMAX, the YieldMax Universe Fund of Option Income ETFs. I'm not the biggest fan of YieldMax ETFs, but this one, because it is pretty diversified, because the holdings in YMAX, it's a lot of the different YieldMax ETFs. So with this, you're not going to be overly exposed to a single one. So that helps me sleep a little bit better at nights. Now, YMAX on the max time frame is down around 10%, and this is around since the start of this year, so down 10% as far as price goes, that's not necessarily great, but if you look at the amount of cash flow this ETF has paid investors, we're talking 65 cents, 73 cents, 73 cents, more or less around 60 to 70 cents every single month since inception. Now, because YMAX pays anywhere from around 60 to 70 cents on a monthly basis, an investor would potentially only need to purchase around 1,400 shares of a YMAX in order to hit that $1,000 goal of cash flow, which for an ETF that costs around 18 bucks is not that much money invested whatsoever. Not to mention, even with that massive yield and even with the price decay that we've seen since inception, YMAX still with a $10,000 investment and dividends reinvested has offered investors around an 8% total return or around a 14.7% annualized gain, which again is sort of more or less what investors expect out of the market. And with the massive high yield and cash flow potential, this ETF, even with dividends not being reinvested, still is offering investors around an 8.9% total return and around a 15% annualized. So although the ETF has decayed a little bit and has eroded over the last year or so, YMAX ETF's cash flow has been up for it and then some. So there we have it. Those are 3 different ultra high yielding ETFs that not only each have a positive total return, at least historically, that's all we can go off of at least so far, but also offer massive high starting yields from day one. Now, every single one of these ETFs, in my opinion, as far as the ultra high yielding game, anything that's yielding over 10%, 12%, 14% could all be ETFs that are definitely worth looking into. But of course, when it comes to ultra high yielding anything, be sure to be careful because some of these investments might be a little bit more risky than others. So now that we went over all 3 of these different ultra high yielding ETFs and I shared with you about how many shares you would need to purchase in order to hit $1,000 per month in dividends, I lastly want to hear from you guys down below. Out of the 3 ETFs, QQQI, YMAX, and of course SVOL, if you could for whatever reason only hold on to one, which one would it be and why? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.